Just last week, we told you about the dilemma facing the Reserve Bank of India. Should they stick with aggressive interest hikes or should they prioritize growth? Well, today we got the answer. The Reserve Bank of India has announced another interest hike. By how much? 50 basis points. The new lending rate is now 5.9%. The technical term for this is repo rate. Let me explain. Time now for a short explainer. The repo rate is a rate at which the RBI lends to commercial banks. These banks often transfer this higher rate to us, that is the customer or the consumer. Meaning, if the repo rate is higher, our loans will become more expensive. And today's hike was the fourth one in 2022. The RBI has consistently increased the interest rate to curb inflation. The first such hike was in the month of May. And since then, the RBI has raised rates by 190 basis points. So the plan is clear. It is to tame inflation and defend the rupee. But there is a downside to this plan, and that is falling growth. When interest rates rise, lending slows down. And low lending means low spending. The RBI is aware of this consequence. It has slashed India's growth forecast already for the current fiscal year. It was earlier 7.2%, and now the new forecast is 7%. So the rising interest will hit India's GDP growth. The RBI Governor, Shaktikanta Das, blamed global factors for the rising inflation. Listen in now.
The inflation trajectory remains clouded with uncertainties arising from continuing geopolitical tensions and nervous global financial market sentiments. In this backdrop, the MPC was of the view that persistence of high inflation necessitates further calibrated withdrawal of monetary accommodation to restrain broadening of price pressures, anchor inflation expectations, and contain the second round effects.
So how have the markets reacted? You will be surprised. The Nifty closed 1.64% up. The Sensex gained 1.8%. The markets closed in green. So what explains this surge? If rate hikes are bad for growth, why are the markets applauding the move? Because of two reasons. Number one, the markets had already factored in these rate hikes. So most agencies and experts were predicting a 50 basis point increase. So it wasn't really a surprise. Reason number two, it shows clarity and commitment from the RBI. Two things that markets always like. Today's move also shows that the central bank is intent on defending the rupee, the currency. It is trying to stop a capital exodus. And that's the technical aspect of the RBI's decision. And now, let's focus on what all this means for you. Most people engage with banks in two ways, as we all know. You are either a depositor or a borrower. So if you are a borrower, today's rate hike is bad news for you. Why? Because your EMIs could increase. Your home loans will become more expensive. And your existing loans could drag on for longer. But then again, if you are a depositor, today is a good day for you. You could soon be getting higher returns on your deposits. But listen carefully, there is a catch. You see, banks are quick to transfer interest hikes onto customers. But when it comes to returns, they are slow. So now is the time to be vigilant. Keep a close eye on your loans and deposits. Also, your investments. I'm sure you've heard about the most basic market strategy. Buy low, sell high. So right about now, there could be a tendency to do exactly that. Not in the Indian markets, but abroad. This data should tell you why. The Nasdaq is 25% down in the last 6 months. Dow Jones is down 15%. In Britain, the FTSE is down 8%, while in Germany, the DAX is 16% down. So foreign markets are inching to bearish territory. Conventional wisdom says this could be a good time to invest abroad. So like I said, buy low, sell high. That's the advice. Your investment could multiply when the market's correct. And that's just the thing about stocks. They don't remain gloomy forever. The highs and lows are part of an inevitable cycle. But the only worry is this. How long will that cycle last? because sometimes the lows can be long and painful. In fact, noted economist Nouriel Roubini is predicting exactly that. He believes a recession is around the corner. It's something we've been reporting on Gravitas. He also feels it will last throughout 2023. If it's a normal recession, so to speak, the US indices could drop 30%. But then again, if it's a deep recession, all bets are off. Roubini is predicting a 40% drop in that case. Now I know what you're thinking. Economics is an imperfect science. Predictions and projections have gone wrong before. So why should this time be any different? Well, Roubini isn't just any economist. He accurately predicted the recession back in 2008. So he has a track record of getting these things right. Plus, the investor sentiment isn't encouraging. Big funds in the US are trimming down their holdings. Take PIMCO, for example. They are an investment management company in the United States. Recently, they have started dumping credit options. Put together, most mutual funds are beating a hasty retreat. They have shed $27 billion in credit options. Now that's around 30% of their holdings. So why am I throwing all these numbers at you? My point is this. US investors are wary. In this last week, global markets witnessed a sell-off worth $10.8 billion. And the week before, it was just $1.65 billion. So what does that tell you? That investors are bracing for a long and painful recession. They are pulling money out of stocks. So sitting here in India, it may look like it's the right time to invest abroad. But do that at your own risk. Only if you have the appetite, the risk appetite as they say, and the pockets to ride the troubles. Because chances are the slide isn't over yet. Finally, let's sum it up. What should you do as of now, given the developments of the day? Most experts suggest diversification. What does that mean? Invest in multiple sectors, multiple markets, and multiple asset types. That's the best way to ride out any recession or slowdown. Spread out your money and try and soften the blow. WION World is now available in your country. Download the app now and get all the news updates on the move.